Good morning and welcome to your Financial Empower Hour. This is Jason Cryderman with Great Lakes Investment Advisors. And I have not only the best co-host in the radio industry with me today, Mr. Tony Shore, but I believe, Tony, in the 5 years, I think it's been 7 years that I've been on the radio.
Wow.
You are my third host, my longest standing host, but I truly believe that in the studio with you today is, again, the best, the absolute hands down best guest I've ever had.
Oh, yeah.
We have Lisa Schreiber with us in the studio today.
Woo-hoo! The crowd goes wild. The crowd's going crazy. You heard that?
So for my viewers and listeners, today's an awesome day. First of all, I want to say happy 250th birthday to the great United States of America.
Woo.
Happy Independence Day. As we record this show, it is July 6th. So you're hearing this a week later by the time you view this next Sunday. But we just came through an awesome celebration of an Independence weekend. I hope everybody had a phenomenal Independence Day. I hope you had a lot of fun with friends and family and hot dogs and watermelon and boats and just enjoying some fireworks and awesome time. And what a phenomenal weekend and birthday for our country to celebrate. The weather here, anyhow, you guys, weather here was beautiful. And, Tony and Lisa, they're over in Minneapolis, so we're going to find out from them what the weather was like over there, how they celebrated. So what was it like, you guys, over in Minneapolis, Minnesota? How was the weather? How did you guys celebrate, the independence and the 250th birthday of the United States of America?
Lisa, take it away. Did you do anything for the 4th?
Yeah, actually, I went to Wisconsin with my husband, two friends. They have a cabin there, and we just hang out and had some barbecue, some hot dogs, like you said. Actually, some boats on the lake. So
did you get out on the water?
Yes,
you took the boat out.
Yep. So very traditional, but it was fantastic. Whenever you have such a special day like the 250th birthday. The weather was mostly fine. We had some little bit of rain, but that cleared up before the fireworks. So that was great. But yeah, fantastic overall.
Yeah, we had a little, it was short, but there was a pretty big storm that rolled through a lot of the area, but it didn't last long. And when it cleared up, the fireworks took place. But the day was pretty good. I mean, it wasn't quite as hot as it had been. It was still warm, but not too bad. So, yeah.
Yeah, same over here. I mean, it had been earlier in the week. It had been so darn warm. I mean,
brutal.
Monday and Tuesday just got hotter. Wednesday got hotter, and Thursday got hotter. And then Friday was like maybe the same temperature as Wednesday and Thursday. Might have cooled down a little. Saturday was definitely a little cool down. We did have some weather come through. I think we had just a little bit of sprinkled rain during the day. I was in Sanford, my hometown, and we were back on the lake. As Tony, I know you know, and Lisa, I'm not sure you know. But May 19th, 2020, right during the middle of COVID, we had 4 dams breach between our lake, Sanford Lake, Wixom Lake, Smallwood Lake, and Secord Lake. Those are all lakes north of ours. So there was just a lot of rain, a lot of flooding, and unfortunately it was devastating for our lake and for our town, and flooded our whole town out. Our town is back now. It's been doing very well, but this is the first year we got our lake filled back this year. So it's been 6 years, again, since May 19th of 2020, where Sanford Lake had essentially what wasn't a lake. There was a little stream, there was a stream and a little small river and a lot of swampy area and a lot of trees growing. So this year, finally, we got our lake back earlier in May. And so we got to spend all week and all weekend out on Sanford Lake, watch the fireworks again after not being able to see them out there for 6 years from the boat. Wow. Just an amazing weekend, amazing blessing to be back on Sanford Lake again. And yeah, we did the same, Lisa, like you. We were very traditional. We did a lot of hot dogs. Of course, whenever I eat hot dogs, I have ketchup and mustard. And I'm asking anyone in my family, if there's mustard around me, it's on me. I am notorious. If I'm going to eat mustard, I should wear yellow socks, yellow shoes, yellow pants, yellow. So you can't see it. Yes, because if there's mustard around me, it's on me. Ask my wife. She's phenomenal at doing laundry and getting out those mustard spots. But we had a lot of we had Doritos and hot dogs and some corn on the cob and some bonfires and fireworks, and we're out on the boat. It was just an amazing week.
I bet the kids enjoyed that too.
Mm-hmm.
Carson,
They
fun?
did, yep. And with Lexi being home from college, she's home from Michigan State, and Josie and Carson and Amy, we got to spend a lot of good quality time together. And
Right.
for sports wise, this is, as all my viewers and listeners know, our kids are extremely busy with sports. And I know some of you are saying, well, that's an understatement. But this was what they call dead week for high school sports. So they could not have any practices, no teaming, no nothing for this past week. So that was really cool too, because they gave us a little extra time off. The kids didn't feel like they had to always be running to practice, running to school. So it was good. It was a really good family time and a great celebration of our birthday.
Excellent. Wow. You had quite the 250th. I
Yep.
love
Oh
that.
yeah. Oh yeah.
I love that. And I love, Jason, that it's always about family with you, and that's so important. Sounds like you got to spend time with the family as well, and I did as well. My wife and I and my son and his wife went out to see Saints baseball game last Thursday, and they had a big fireworks display. And then Saturday, we went out to Big Rock Creek, which is over in Wisconsin, and they had festivities and food trucks and fireworks and things. So it was a lot of fun. Yeah, I always enjoy the 4th. I mean, what other holiday? It gives you an excuse. You can eat both a brat and a burger at the same time, and nobody's going to question.
Nobody's going to question it, Tony. Nobody will care. Not at all.
Nope. Nope. You can even have a couple of brats and a burger, and nobody's going to give you a hard time about it.
Nobody will question it. Nope.
That's the great thing about the 4th. That's awesome. Well, and I mean, it means so much. I mean, 250 years, but I'm going to age myself here. I actually remember the bicentennial back in 1976. I was 10 years old, and we went to a huge thing called Farm Fest 76 up in Minnesota. It was a huge event. Thousands of people on this guy's farm spread out. I just remember lots of great food, a fair atmosphere almost, and so many activities and concerts. So that was neat. And the quarters, 1776 to 1976, the bicentennial quarters. So I remember the bicentennial, now the 250th.
Yeah, so we talked about that quite a bit, this week. So in that bicentennial, I would have been 2 years old. So I was alive then, but I don't remember it. I was born in 74. But on Saturday, we actually went from Sanford. We went to downtown Midland here, not too far from the office. They had a signing of a 50-foot Declaration of Independence. So they came together, our town here in Midland, and they had this 50-foot huge, it's on vinyl, I guess you'd call it. Declaration of Independence. And so there were probably, at the point where I got there, and I was with myself, my neighbor, his wife, Carson came with us, a couple other neighborhood kids, and we all went down. Scott, our neighbor, he's a sheriff here in Midland County, and he was one of the speakers. They had 20 some speakers talk and say maybe 2 or 3 sentences of the Declaration of Independence. So they basically read the Declaration of Independence. And so he asked us to come down to that. We did. And we got an opportunity to actually sign the Declaration here in town, which was pretty cool, to get up on the ladder and sign your name to the local Declaration of Independence. And I guess what they're going to do is they're going to put it in the basement of, I think, either City Hall or the courthouse. And they're going to leave it there for 50 years. And so time capsule, so to speak. And in 50 years, for the 300 birthday of our country, they're going to pull out that Declaration of Independence and put it up again so people can come see it and have the remembrance of, hey, back in 2026, we had this declaration for our 250th. We signed it. Now, I don't believe I'll be there to see that. I'll be 102 if I am. So I don't believe I'll be there.
You'll be there.
But, well, between
nowadays, science and diet and exercise, I have no doubt, Jason, that you'll.
Yes, there's a lot of science. No good diet, no good exercise. So again, I got 1 out of 3, Tony. I will see how it goes. But I told Carson, I said, because Carson was there and he got to sign it as well. And I said, now Carson, in 50 years, bud, you'll be 63. Dad might not be here. I said, but wouldn't it be so cool if you can remember this at 63, no matter where you are, get back to Midland, Michigan, for 4th of July in 50 years to be able to find yours and your dad's signature on that Declaration
So
of Independence. How cool
It
would
is a
that
good
be?
idea.
That's a
For his
great
his
idea.
kids and his, which will be my grandkids. And I just
What
think
a
it's just such an
fantastic
awesome
idea
it's
that
so
the
cool,
town
yeah.
had, that they did that too. I mean, that's amazing, really.
Yep. It was pretty cool. Pretty cool.
Yeah. Well, hey, we're going to take a quick break and then we're going to come back to get to the heart of the matter. And that's a mid-year review of what's been going on in the markets, what's to come. I mean, we have Lisa Schreiber here, portfolio manager at Gradient Investments. Jason, I know you have a lot to ask her about and talk with her about. Listeners, before we do, be one of the next 10 people to contact Great Lakes Investment Advisors, and you'll get a copy of Jason's book, Empower Your Retirement. Just call 989-835-7203. And you are listening to Your Financial Empower Hour. I'm your co-host, Tony Shore. I'm here with our host, Jason Cryderman, and our very special guest. Once again, a huge get for the show, Jason, Lisa Schreiber from Gradient Investments.
Thank you for having me, guys.
Yeah. Well, Jason, where do you want to start your discussion? What you want? I know you want to get some info out of Lisa while she's here.
Yeah, absolutely. I got a lot, Lisa, that we're going to talk about today. So thank you again so much for taking some time out of your busy schedule and all your media appearances and all your traveling. And again, let's talk about your number one job at Gradient Investments. So that's kind of where I'd like you to start, is maybe give us just a Reader's Digest version, Lisa, of what you do at Gradient Investments as a associate portfolio manager. Like I tell all my viewers and listeners all the time, like that is truly what I call in the trenches. Like the people that they're in the trenches, they're in the know, they're doing the research, the buys, the sells, the trades, the oops, got it wrong. Yep. Got it right. All of it. Right. Like that's all. So from your perspective, Lisa, take just a minute or two, please. And tell my listeners and viewers, what exactly is it, Lisa Schreiber, that you do as an associate portfolio manager for Gradient Investments?
Yeah, so interesting, Jason. So I really found my dream job. I have to be honest about that. So I'm associate portfolio manager. So I am in the background a lot, behind my screen all day, every day, nose deep into the markets and the economy and what's going on and what changes, if at all, we have to do to our portfolios to making sure we do our best for our clients. And I do a lot of research. That is one big part of my daily job. But then again, I'm not only in the background, and that makes it so special for me because sometimes I can join great shows like yours, Jason, and I'm invited to podcasts or fly out to advisors for client events and see our advisors in action. I'll go on TV and share our perspectives on the market, or write up some reflections and some essays for our clients to read, where our heads are at and what we are thinking of. So it's really a great mix of everything, I would say.
Good. Well, that's awesome. It really is a dream job. And every time I've talked to you about your job and what you do and how much you love it, and I've thought the same thing. And man, she really has found it right now. And you have a phenomenal background and a great family. And just to be where you are today with the Gradient family is awesome. It's wonderful. And I appreciate you again for being on the show. So let's jump right into it. I want to talk today, Lisa, about, here we are mid-year, right? We're recording this show. It's July 6th. So we're mid-year. And boy, have we been through a lot this year. We look at January, February, things were phenomenal. Life was great. There were some issues or concerns boiling, and all of a sudden, boom, it overboiled in the Middle East. Here we are into March and April. We start bombing. We start shutting down ports. We start oils. I mean, it just went crazy. So what I'd like for you to do is bring us through the first half of 2026, kind of in the markets, right? First half of 26 is in the books. What happened? What did it look like? And then as we flow through today in our other segments, we'll talk about, hey, okay, now we're through the first half of the year. This is what happened. There was a lot of, fireworks, for lack of a better word, unfortunately, with, bombs and things going on over in the Middle East. And, but here we are now with maybe some agreements, some settlings, some reduced oil prices. So, but let's start off before we get into where we're going, is what the heck happened so far in 2026?
Yeah, that's a good question to get us set up once we now have the first half year of 2026 in the books. I mean, it went by pretty quick.
Yeah.
Boy, did it ever.
Yeah, right.
Yeah.
And I always like to to focus us first on the overall asset classes. So how are markets actually standing after the first half year, right? So US markets, S&P is up over 10%. International develops as well. We have emerging markets being up nearly 26%. Bonds are up. Gold is a little bit down. Small caps, another outstanding performance, up over 22%. That's actually the best first half year since 1991. So that says a whole lot. So
for
that
small
is
caps?
for small caps specifically. So that's just the overall numbers, right? So everything looks good on the outset, right? Everything looks great. But Jason, you already teased it. Well, investors had to go a lot through these for these returns, right? There was a lot going on. We had obviously the AI theme is still strong, right? It's still going on.
Oh yeah,
with hyperscalers, how much they are spending, and where are they spending it, right? And what happens in the whole AI theme? Who are the beneficiaries? So we had some change there, and we heard it lately with the Magnificent Seven, for example, right? The biggest companies in the U.S. in the world, riding most of the AI forefront, really putting nearly $700 billion to the ground to build out this AI infrastructure this year. And they were basically riding and leading markets the last couple of years. And now we hear a little bit about, well, maybe they're not the Mag 7, the Magnificent 7 anymore, but more the Leg 7, right? Because their performance is not as great this year, but markets are still up. And why is that? Well, we have a broadening out, and we talked a lot about that coming into the year. More areas of the markets are participating, and that is absolutely fantastic. So without falling off a cliff, they are pulling back a little bit, but other areas of the market, and we stay within the AI trade, the picks and shovels, so to speak, the energy companies, infrastructure companies, industrials that really are needed to put the data centers and all that to the ground, and are actually the beneficiaries of the $700 billion spent, are actually working out better. So that is a change that we saw. That really kept investors on their toes, like who are the beneficiaries and what's going on there. And then also, and you teased it as well, we have the US-Iran conflict going on. It started end of February. I think we are closer to a resolvement now than we are being back to the worst, but there's still a lot that needs to be figured out. Obviously, oil prices spiked to about $120 per barrel, which obviously puts a lot of strain to the consumer, to discretionary spending, right? When more of your discretionary income needs to go to gas and to all of that. Now we have a retreat of oil prices, so we are gonna at under $70, which is fantastic, but that certainly put investors on their toes as well. So there was a lot going on. But overall, I think we're in a good spot overall, and I think we're well set up for the second half of the year.
Yeah, that's you covered a lot right there, and I want to just pick a few little pieces out of there, so I can focus, kind of relate it to reality of what's going on, not only broadly, right, but I think a lot of my viewers and listeners and all of us in general, we hear all this stuff, this big, whether it's good noise or not so good noise. It's a lot of, we hear these numbers and this noise. We're like, well, I don't know what that means to me. I mean, I know when I pull up to the gas pump, I don't, you mentioned oil prices went from 120 down to about 70, yet every time I go to the gas pump, I know the price I'm paying didn't drop as much. And so you hear a lot of people at our 4th of July picnics and the fireworks, and you hear people talk about like, man, like I thought oil was dropping and I thought things were getting better, but gas is exactly the same. If it's maybe 2 cents cheaper than it was, and everything else that relates around, the prices are still up there. So let's chat real quick about, the market's doing good. As you mentioned, S&P up double digits, and international developed markets double digits, emerging markets 25%, bonds up, which I think bonds being up right now is a positive thing, right? With interest rates where they are. Gold being a little bit negative. That was on quite a tear for a while there. And so everybody was on this big gold kick. And again, this is kind of personal for our viewers and listeners. Remember, when you hear gold's up, you're also going to hear a lot of advertisements on the radio, buy gold, buy gold, buy gold. Well, when are you supposed to buy? What's in your best interest? To buy when it's high or buy when it's low? you want to buy low. And so when you hear gold prices are up, that's when you hear more advertising. The person that really makes more money most of the times during that point in time is the person that sold it to you. So be careful not to get caught up in that. So to see a little pullback in gold could be a good thing for, a couple different areas of the market that Lisa, you might want to touch on. But again, the reality to the consumer. Let's break it down to pulling away from the kitchen table in the morning, going off to work, sending kids off to whether it be school or sports or daycare, and pulling up to that pump and pulling through, going to the grocery store in the evening to come home and make dinner for the family. How does all this noise in the market, how does it relate to our kitchen tables?
I mean, like to your point, I mean, oil has dropped since the war broke out over some talks that there might be a peace deal, and then we talked a lot about the Strait of Hormuz, which is a global traffic area at Iran, below Iran, that where a fifth of the global oil production traffic has to go through. That was one reason why oil reacted that way and increased in price so much. The interesting thing, though, is for gas prices and for the consumer and for all of us, we see a lot of these price increases nearly immediately. But when it goes the other way around, that is not so immediate, right?
Go figure.
Well, it takes the elevator up and the stairs down. So
right.
that we have lower oil prices, or not as much of upward pressure. That is good, but again, it needs time to really go back to normal. So for all the flows to go back to normal, so we probably will have that pain point a little bit longer. And then we also saw it with inflation, right? I mean, inflation is back at being a little bit the worried child with higher oil prices. And to your point, it does not only feed into the gas prices, that's where we usually see it first, but also to grocery prices, because oil is in everything we have. And if it's not in the product itself, well, then it's in the transportation to get these products to
or the manufacturing.
Exactly, right. Yeah. So that will still be talked about for quite a while. So even if we hear a peace deal is being made and the Strait of Hormuz is open, we probably still see some more time until everything is back to normal, and then we feel some ease to that too.
Yeah. Well, I tell you what, we're going to take another quick break, but that's a great thing to think about. And when it comes to the oil companies, they are quick to raise and slow to lower. I think that's the bottom line there. Well, Jason, great show so far. So great to have Lisa here. Listeners and viewers, here's the deal. Jason is offering a no charge, no obligation consultation. There's no reason not to pick up the phone, call his office, great team there at Great Lakes Investment Advisors, and set up a consultation. Just if you have questions about the show, questions about your own finances, investments, retirement income planning, that number is 989-835-7203. That's 989-835-7203. And you're listening to your Financial Empower Hour. I'm your co-host, Tony Shore. I'm here with our very special guest, Lisa Schreiber, and our host, the man with the plan, Jason Cryderman. Jason, great show so far.
Yeah, it's been awesome. It's really great to see you again, Tony, and talk about the celebration of our 250th birthday of the United States of America and how we all celebrate Independence Day. But it's even, I think, the most special show of the year because of having Lisa on it with us today.
Yes,
so
that's what makes it really special.
It's cool to get guests on the show, Tony, so it's not just you and me, and my listeners are like, oh my gosh, Tony and Jason again. They're boring. So whenever we can have a guest, I'm sure my listeners and viewers love it. When we have Lisa on the show, I know they love it. So this is it caps off the first half of the year, and bringing in the second half of the year couldn't be, Lisa, on a better note than having you on my show. So thank you again. As we left the last segment, we were talking about how oil prices went up, and then gas prices up, and gas prices not so quick to come down. And it's funny you use the Lisa used the analogy. Oil prices, gas prices up with the elevator. They took the stairs coming down. Well, Lisa, it's kind of how I used to tell my dad what was going on with my grades, right? So my GPA, my grade point average, I said my grade point average went down really fast. but it went up really slow. So my grade point average, it took the elevator down, like emergency elevator right to the bottom. And then it was very slow. It took the stairs on the way back up.
But you got back up, Jason. That's the most
But
important
that was
thing.
the point. As I got through junior high and dad had to maybe grab me by the ear a couple times and straighten me out. And then, and get me on, get the grades, your GPA back on the escalator. Right. And then back to the elevator. And by the time I got through high school and into college, and the rest is, but it's, so anyhow, so let's keep going. Now, we talked about what happened kind of in the first year, where stock prices have been, oil prices, this treaty, this potential peace deal we're working out with Iran. Let's talk about, what you see as far as maybe the potentials of, this peace deal, right? So if things go good, which we all hope and pray, of course, that they do, what does that mean for the U.S. economy? What does it mean for the U.S. consumer? And really, what does it mean for the world economy? And then I want to flip that coin on you right before we end this segment. Just say, golly, what if things don't go so good? What if we slip back into a worse war, right? And oil shuts, the Straits of Hormuz shut off again. And what might that look like for the world and the U.S. economy?
Mm-hmm. So overall, what's going on with U.S. Iran, I would say that could be a surprise for the markets. Because I think the general consensus now is, okay, we're working on a peace deal. We're nearly there. We just have to, figure out some more things, and then everything goes back to normal. I think that's the consensus now. But as I said before, even if we open the strait, oil flows freely again, and that's the most, difficult thing here is oil for the global supply that comes from this region, not only for Iran, but especially from Saudi Arabia, Kuwait, Iraq, all of that needs to go through there. So it still needs time until that is flowing freely again. Global reserves, not only in the US, but also in Europe, are on a record low because they released something of the global reserve to keep oil prices a little bit more steady. OPEC Plus, we just heard today, increased their output to kind of help with the global supply too. So that is all depending on if the peace deal holds and we have some resolvement, and then it takes probably a couple of months until it flows freely again. If we stay with the consensus here and we say, okay, we have a resolvement soon, then we can see some inflationary pressure easing, right? So we see that going back to more normal. Again, inflation is still higher than the Federal Reserve would like to have it. That was certainly not helpful in the first half year. But when we look at the overall U.S. economy as it is now, even if inflation is a little bit the worry child, then we still have, when we look at GDP, gross domestic product, overall strength of the U.S. economy, well, we are back at over 2% growth of the overall U.S. economy. That is fantastic. So the U.S. economy is very resilient. When we look at the labor market, which is the third thing, like inflation, overall growth, and labor market, then we just got a report last week. We have an unemployment rate of 4.2%, which is very low compared to historic levels. So all of that is very resilient. And when we look at the second part, and that's what I'm not bored to say, it's what drives the stock markets in the long term. It's the economy and earnings growth. And man, on the earnings growth side, corporate America is on fire. This is absolutely insane. It's expected to grow their earnings. So the 500 companies, the 500 largest companies of the US in the S&P 500 are expected to grow their earnings about 23% for the full year.
Wow.
Just to put that into perspective, and why I'm so excited about this, that usually does not happen outside of coming out of a recession. When we see some upswing outside of a recession and coming out from an economic slump, then we usually see those numbers. Well, there wasn't a recession, and the numbers are absolutely crazy. So corporate America is on fire, and that certainly gives us a great tailwind for the stock market, for overall our clients' portfolios, which is great. Economy is still strong, even if we see some little headwinds here and there. So that two things are certainly great that sets us up for a great second half of the year, where we think, okay, markets should grind higher. Well, I also say, though, we still have some headwinds that we figure out, some concerns, but there always are, aren't there, Jason?
Sure.
I mean,
Oh yeah.
So we have some headwinds that the market needs to figure out. First, for example, well, we have still the AI trade going on, right? With different areas of the market, investors are getting a little bit nervous of all that spend that is put on the ground. Is that really paying off, right? So we see some rotation there. Then we also have midterm election year that's coming up later this year, right? And usually election years, no matter if it's presidential or midterms, usually sets us up for a little bit more volatility. And why is that? With all of the campaigning that's heating up right now, probably over the next couple of months, and all of that, we do not know how Congress will be made up by the end of election day. And that all is uncertainty. And what the market doesn't like is uncertainty.
That's right.
So that can set us up for a little bit higher volatility. And obviously also earnings. I told you earnings expectations are really, really high. Well, that's a high hurdle also to cross for companies to being able to put these expectations into real numbers.
So
right?
if they don't hit the expectations, then that can negatively affect the market, at least short term.
Yep. So all of that, I would say, are some concerns that the market has to go through. But overall, we have really strong tailwinds. Again, a little bit higher volatility we should expect, but it should be a great second half of 2026.
Wow, that's crazy that, you look at the earnings growth, as you mentioned, those numbers are staggering. And so thinking about, and you may know this number close to, but of the, let's say they hit that 23% earnings growth this year, how many of those corporations, some of those companies out of the 500 have already done that. And now they have to do it again to meet a second high mark. And how many of them would that be the first hurdle? Because obviously that's an average, but that's a lot of companies, and that's really calling for a majority of those 500 companies to really do very, very well, very strong this year. And for some companies, it's going to be easy. For some, it's going to be, wow, we can't do it again like we did before. And some companies have never done that before, maybe. And so what kind of challenge is that internally in the market?
Well, we saw it, for example, with the last, and I bring a specific example with NVIDIA, for example, right?
Okay.
The star child at the forefront of the AI trade, star child over the last couple of years, they beat their earnings every single time, every single quarter. So Wall Street analysts keep expectations out, and NVIDIA obliterated these expectations every single time.
Yeah.
They did so last quarter, but when we see at the stock reactions, they were more muted, right? So the market kind of expects NVIDIA to perform very well. And when we look at how big that company already is, it has nearly a 9% weight within the S&P 500, which is a lot.
Yeah.
Then we see the hurdle to cross these expectations gets higher and higher. And that's what I also say is positive what we see now as these companies, not falling off a cliff at all, but kind of move back a little bit. Then the others are joining, right? And we saw that in the first half year, small caps outperforming. That hasn't happened in the 15 years before.
Yeah, that's been a long time.
Right. Value stocks outperformed growth stocks, which also hasn't happened in years so far, because all the companies within the AI frenzy, that's on the growth side and not the usual picks and shovels and consumer staple companies that you might think of. So we see some rotation there, and we see other companies stepping up and being able to have higher expectations and beating their numbers, and are able to step in without the big boys really falling off a cliff. And that is really, really healthy for portfolios and give us also a little bit more balanced returns going forward. And it's a little bit healthier setup for our portfolios and for the market. And it's actually a pretty good tailwind too.
Yeah, that's huge. Hey, we do need to take another quick break, our final break, Jason, before you ask the next question, if that
sounds great. I'll save it for the last segment.
All right. Well, hey, we're going to give away 10 more copies of the book. Everybody calls in, loves the book, and it's no charge. Shipping, everything's covered. There's no obligation. So call and get a copy of Jason's book, Empower Your Retirement. It's a great book. It covers investments. It covers Social Security, Medicare, healthcare costs, everything you need to know for retirement planning, at least to get you going. So, Jason, it's okay if we give away another 10 copies of the book, right?
Yes, sir.
All right, just making sure. I'm giving away your book, spending your money.
Even if I said no, Lisa, even if I told him no, he still would. He does it.
Oh, yeah, we're giving away the
He
book.
doesn't listen. He loves giving away, and we love it too. So
yeah.
Doesn't matter what I say.
Just call the office, 989-835-7203. That number again, 989-835-7203. And this is your Financial Empower Hour. So before I rudely interrupted you, Jason, what was the next question or thought?
No such thing as rudely interruption, man. That you're the one that controls the show. Lisa and I could just sit here all day and we'd just go on and on and on and on and on. And
Right.
we'd have lack of control because we wouldn't be able to run this as a radio show, like structure, like we have to.
Sure.
Right? So Tony, that's why we keep you around, is you're kind of like the strict, structure, like we got to take a break and you can't say that. And so that's we got to keep you around, I guess, Tony. But
Sure.
Lisa, back to you and I. Let's have fun without worrying about Tony for at least the next 8 to 10 minutes. So what I was going to say, and we mentioned last segment, the Magnificent Seven for the last couple years has been driving 70, 80% or more of the market, the S&P 500's performance. They've really been pushing and pulling all the weight. So that means there's been 492, 493 other companies that maybe were kind of lackluster, maybe even showing losses. So for the Magnificent Seven to be pulling back, now I don't think I heard you say that means the Magnificent Seven are losing. It means they're still growing, just at a heck of a lot slower rate. But what that's done is it's allowed the other 490 some companies, I guess, to have a broader performance, broader contribution into our market. So now a lot of other companies are stepping up, and now we don't just have Magnificent Seven driving. We might have 20, 30, 40, 100, 200, 300. All these other companies are allowed to have experience as much growth and contribute. And so that really is broadening the market. That's awesome for portfolios. That's awesome for portfolio managers. That's because now you don't have to worry about which seven do we pick and what happens if these seven do fall. It just helps when you have so many more players and contributors to this powerful of a market and economy.
Absolutely. I mean, you summarized it perfectly. I mean, this is great for us too, because it opens a lot of opportunities for active management to really pick the winners and to really be more balanced here and have more of our portfolios actually contribute to returns.
Yeah.
And to your point, I mean, the big ones, right? The Magnificent Seven, most of them are, not all of them, but I would say 5 out of 7 are heavily invested and are called hyperscalers, because they really put the foot on the ground when it comes to all of the AI built out that drives overall the market still, right? But they put $700 billion to the ground and spending that. Well, that spend is another company's revenue. And now we see more in other sectors of the market, materials, energy, right? And what I said before, industrials, like basically the cement that goes into data centers, the chips that we saw rally lately, all of the little cables and everything that goes into these data centers. All of these companies in the infrastructure really stepping up, and that is really fantastic news here. Without the larger ones really pulling back too much, but giving the others a little bit more opportunities. And also, it's not only in the US itself. Again, not only large caps, also small caps, like I said, right? There's a lot of opportunity there too, but also international, right? International developed markets are doing great. Emerging markets are doing great. And that all kind of, I think, is a great evidence of the value of diversification, right? I mean, over the last couple of years, and some clients asked me at some point, why should I invest in anything other than the US, right? US large cap, that is what works. Why would I invest in anything else? Well, now we see there is value in diversification, right? In having something a little bit of an international, in having something a little bit in small caps, not laying all your eggs in one basket. And something works, and if it does, it's obviously gives us a little bit more balanced return. So that is fantastic.
Yeah, absolutely. No, thank you for that. I greatly appreciate it. This is amazing. I want to, as we're getting towards the end of the show here, we're going to talk about something that is, I don't think in the last 2-3 months, I don't think you could have turned on TV, the radio, Facebook, ticked any kind of social media, having picnics with the family. And if you didn't talk about or hear somebody talking about the largest IPO in history that we just went through just a few weeks ago, and that's with SpaceX. So from Lisa Schreiber, portfolio manager of Gradient Investments. Now, remember, all my listeners and viewers, the Gradient Investments, they manage money, right? They are in the trenches. So we're going to hear now from somebody who's in the trenches. What the heck is an IPO? Really? I mean, all sides of it. Because we could, I know what that is. Well, no, but really, let's talk about historically what happens before, during, and after an IPO. And what does it mean for SpaceX to have the largest one ever? And what might that play out short-term, medium-term, long-term in the future of not only SpaceX, but overall market and economy? So let me put you on the hot seat for the last few minutes here, Lisa, and let's talk about SpaceX.
Well, so interesting. I mean, SpaceX, like you said, the largest IPO ever in history, and not by a small feat. That's by
it's crazy.
They raised about $75 billion. The second largest one was a couple of years ago, Saudi Aramco, which is an oil company. They raised $25 billion. So now we see this. This is not by a
300%. They outblew them by 300%.
Absolutely. And it also was an interesting IPO. An IPO generally the first time a privately held company goes to the market and is traded on a public exchange, and everyone can buy and sell shares. And I've never saw that much excitement around an initial public offering ever. And also the ones, the more veteran investment managers here that are doing this for 30, 35 years, like they never saw that either. So there was so much participation, and everyone wanted to know at least something about it.
A lot of hype.
A lot of hype, but it also has to do with the CEO, right? Elon Musk is a visionary, and there is a lot of opinions around him, right? Either it's negative or it's positive, but everyone has an opinion, and at least we can all agree on he's a visionary, right? And he did that with multiple companies, and now with SpaceX. And it's also interesting because it was a very special IPO. So a couple of things were different than other IPOs. For example, they went public with a set price. Usually it's a range and it's determined, but they had a set price. Then also, again, they had a larger share dedicated to retail investors, right? And not only institutional money managers and the institutional big ones back there, but also ordinary people could buy the IPO price. So that is something that usually does not happen that way. That was very special. So overall, it was very historic. It was very sought after. The only thing that I want to say, though, is with all of that frenzy that's going on with SpaceX, we have to be a little bit careful here, because usually when a company IPOs, there can be a lot of volatility, especially in the beginning, right? We have very big investors that were in SpaceX when it was not publicly traded, back when it was a privately held companies that are in it for years and got in it and funded the companies in the beginning. Well, they are set to being able to, that's the lockup period, to being able to trade their shares after the IPOs. And that can go after 90 days, after 120 days, or even after a year. So more shares are coming to market when that happens, because a lot of these investors are sitting on huge gains, right? They want to make, they might want to realize. So that can set us up for a little bit more volatility until, all of that is figured out. And also when we think of an IPO performance, usually in the first couple of years, after 3 years, it usually lags the market. It's up an annualized 6% compared to the total market, total US market up about 12%. So it's about half of what the overall total market returns. And that's because of all of the price finding and what it's really worth, right? How do we value that when we get the first reports of the company actually and see their finances and have all the reports and all of that frenzy settling down. So I would not say that is negative, not at all. It's a fantastic company. I just want to point out we have to be a little bit careful of the expectations that we have here. But certainly it was
they're
one
still
for the history
reporting
books.
Overall losses. I mean, they're making billions, but they're also not profiting yet. So but with data centers in space, they have a lot of ideas. I mean, it's interesting. It's going to be something to watch, isn't it?
Yep, absolutely.
Yeah. Well, Jason, we're out of time. Flew by.
Unfortunately,
we were just getting rolling. Well, I want to say again, thank you so very much, Tony. Thank you so very much, Lisa, for taking time out of your busy schedule and managing money and traveling and everything. And I greatly appreciate everything you always give back to myself and my team and the families that we manage money for, and today for all my viewers and listeners. So thank you so very much, Lisa.
Thank you for having me.
All right. Well, that does it for today's episode of your Financial Empower Hour with our very special guest, Lisa Schreiber, portfolio manager at Gradient Investments, and our host, the man with the plan, Jason Cryderman.